Welcome, everybody. I'll be your moderator today. I'm Laurance. I run business development at Prudential, so I'm very excited about this money management track today, something dear to my heart. We're going to be covering an interesting set of topics around financial health, investment, and retirement planning. So not much to do. First up, we have changing the relationship between people and money, how things can influence smart financial decisions. We have Sareek Hosein from Commonwealth and Pedro, CEO and co-founder.
Awesome. Well, thank you all for joining our session. Happy to talk about this topic today. Pedro, thank you for
that was weird.
On here. As we get started, I'm just going to say a couple of things. If y'all can't hear us, just let us know. We'll try to keep this on time as we move through this session. As we get started, we're here to really hear what Pedro has to say about his work, so I'll do a brief introduction of myself and then get
no pressure.
Thank you. So again, my name is Sareek Hosein. I'm the Senior Innovation Manager at Commonwealth. Commonwealth is a national financial security nonprofit that works on building financial opportunity for financially vulnerable individuals. Financial insecurity is something that adversely impacts individuals, their families, our communities, our workplace, and ultimately society as a whole. And critical to our work is collaborations, collaborating with individuals living on lower incomes, employers, record keeper, innovators, financial service industries, fintechs, policymakers, nonprofits. So to sum that up, collaborations is really where we see our work make an impact. Our fundamental purpose is to create a stronger and more prosperous society where wealth is possible for everyone. Some of our impact from the last few years has enabled over 2 million people to save over $8 billion on a path to greater financial security and wealth. So with that, Pedro, I'd like to kind of share where we have had an intersection of work, and that's around that mission of building financial security for workers, earning low to mid incomes, and really having that buy-in around organizations. So could you share a little bit about yourself and then your journey at Flourish?
I would love that. And given we have such a small room, can I just quickly get a understanding of who's in the room? So if you are with a financial institution that provides retail products, raise your hand just so we can get an idea. Perfect. If you are a early stage entrepreneur, raise your hand. Maybe a technology provider for financial institutions. Okay. Ecosystem consultants / NGOs. Okay. That's a pretty evenly all across. I'm no mathematician of survey, but it feels like 15% of each one of those categories. Cool. That gives me a better understanding. I'm Pedro. I'm the co-founder and CEO of Flourish at 5, and we are on a mission to help individuals build positive money habits. We are actually building the infrastructure to help retail banks, neobanks, credit unions, and fintechs to engage, drive retention, and activation of their users, specifically those who are historically underserved in the banking system. So this can be a young adult who's starting out their financial journey, or it can be an individual that is underbanked and using a fraction of the banking products out there. So I'm originally from Brazil. I've been in the US since a teenager. My story is similar to many Latino immigrants in the US. My family came to hustle. My mom cleaned houses, did all sorts of odd end things. So money was often tough. We relied on payday loans when emergency came, but I was able to break out of that cycle and have since then building products to help individuals get out of the trap. I worked at Chase, I worked at Morgan Stanley, realized that the products there weren't necessarily designed for everyday people. I then transitioned to a company that did small dollar loans to the Latino community in the US called Opportune, now a publicly traded company. And I've been building Flourish for the past 5 years, which we essentially help banks in Brazil, Bolivia, US, now over 6 countries. We're official partner of MasterCard in distributing our technology. Think of us as like client engagement and loyalty as an embedded solution into the bank app and a set of APIs that read transactional and behavioral data to incentivize and predict people's next action. So excited to be here. Commonwealth has been an amazing partner from the early days where we started with price-linked savings mechanics, and Commonwealth was a leader in the space of giving those mechanics and collaborating with credit unions in the US. So that was like our very, very first early collaboration when I was still a student at UC Berkeley, and I was reading everything related to behavioral science, gamification, and applying that to responsible products.
You know, that's a great segue into our next question around that behavioral science aspect. So can you tell a little bit about how transactional data can be leveraged to build better habits?
Sure, delighted to do that. So even before we get there, right, like we can go into buzz of embedded finance, open banking, AI, all of those components. But the reality is that there's still a very large set of the population that are not performing the first transactions. They may get a loan, out a loan with you, but they never use the bank account. They may get a credit card with you, use it once, but continue to be in a cash-driven economy or underutilizing what they're doing. So where we started was, we started with behavioral element and instant gratification to get people to take the first step. So an example of this would be like, make your first online bill payment using the mobile app of the bank to spin a wheel for a chance to win a prize. Use the card 3 consecutive times this week in a given merchant to get a scratch card for a chance to win a prize. So we started to bring elements from game-like mechanics to what it used to be very boring banking transaction. Then now that we have read access from the bank transactional data, so think about deposit balance, credit card, we also incentivize the user to connect their external accounts into the bank, giving the bank more visibility into the consumer, but also driving those behaviors. So then you can start doing really exciting stuff that's like around prediction, nudging, sending the user in a certain direction. So other mechanics that we have done and packaged through our SDKs and APIs to banks, things like instead of you looking your transactional data, you can actually play a little game that, Sally, how much did you spend on Uber the last 3 months? And the real data is popping up, and as you answer correctly, you start to gain loyalty elements within the financial institution, and the banker, the product leader, the marketing leader is also understanding better their consumer through the digital property, which is usually a huge area of opportunity for most retail institutions that weren't born digitally from day one and are seeking to understand the behavior, the footprint of the user. So you can go from as simple as getting the very first behavior to doing a lot, very much sophisticated things and predicting, understanding the behavior of the user. And institutions are in a different track of this journey, right? Most of them are like, can I activate my government accounts that someone opened an account with me and never returned? What can you do to activate, engage, get people to come back and have their share of wallet of those individuals? So you can do a lot of exciting stuff when you put together transactional, behavioral data, and as we embed a little room into the mobile app of the bank, it becomes us really easy to start to create new mechanics inside of the digital journey. And then the bank doesn't necessarily have to create code, maintain all of this infrastructure. So the trends of embedded finance, access to data, open banking allow us to do great stuff and serve a consumer that historically is a cost structure for the bank.
Yeah, those are great thoughts. I'll tell you what, I stare at a lot of features on my apps and I never activate, but put a game to it and I'll probably do it right now. So I think we missed an opportunity by gamifying our session. We probably could have filled the room and put some incentives here. But kind of in that space, just talking a little bit more about the mission, a little bit more about the buy-in. How are we getting these buy-in with organizations?
Yeah, so we started a company five and a half years ago with the mission of we wanted to help individuals build positive money habits. And we started serving, we were a direct-to-consumer savings account, serving Uber and Lyft drivers. So the mission was there. We got people to save, we got people to put money, we got people to engage, but it was really hard to make money, right? Making money with savings, with a population that is living paycheck to paycheck, And we thought employers would pay for such thing, but there was no tax incentive as there was for perhaps your retirement account or other things. So as an entrepreneur, I quickly learned that I had to do something different, but I had something really interesting, which was this engagement, the retention of the user. So I quickly looked at what are credit unions doing, what are mid-sized banks doing, what are fintechs doing to increase unit economics, and I packaged what I had to talk about drive deposit, drive loyalty, have more profitable customers, reduce default rates of your clients, have them consume more products. So very different language than impact language, which was the mission why I started the company to start with. And I completely pivoted the organization to be a B2B organization selling to financial institutions. So as an entrepreneur, there's tons of learnings there, but essentially think of it as a Venn diagram, right? Banks make money in this circle, impact is this circle. Can we expand this conjunction of it's good for the end user, it's good for the bank, and it's essentially what I've been on a mission on. It's hard. Your product roadmap is challenging, but we recruited people, investors, partners who care about this and are willing to go through those elements. But it's, as a social entrepreneur, this is a dynamic that we often struggled with because you have someone that says, let's just put this mechanic, this incentive to get people to give more loans. Right? And that's probably not the best thing. Can you give them more loans at a better rate? Can you also help them pay on time and establish their credit? Can you incentivize the credit building components? And that may be a shout out to Rodrigo, who's an entrepreneur, Gabriel Money here, doing really cool stuff for credit building for the Latino community, and soon to be a partner, of course. But anyways, I think those are some of the components. It's like riding the bike, right? Like you have the mission, you're steering, but can you pedal with the margin, the unit economics? And we as an organization, we now have over 13 financial institutions. We're official partner of MasterCard to distribute our technology. We had to prove ROI, but we also stayed true to our North Star mission of why we're building products. And staying close to partners like Commonwealth allows us to be close to the research, try new things, but also impact investors in our cap table as well as traditional VC. And that's just the type of business I was personally inspired to want to build versus just for financial returns. And I chose the much harder route.
I'm not sure if I've mentioned collaborations, but I just want to take this moment again to just talk about how that collaborations really help us to learn what's working, what's not working. And when things don't work, that's still a learning. It allows us to grow, allows us to pivot. You kind of mentioned where you started and how you moved. And those learnings are really important for us to continue to work in this space. Needs are changing, they're evolving, technology is changing, it's evolving. So those things have to come together to really be strong with those learnings. I know you've talked about, kind of what the practices, or that's what I'd like you to talk about, is what the practices of this work in Philly. Any case studies of this work in the US that's operating in operation?
Yeah. So a use case of our work. At the core, by the way, our first use case is like driving someone to the digital property, mobile app, internet banking, and then driving a key behavior. Call it deposit, call it making the loan payment on time. So one of our customers in the US is a CDFI organization called Tricolor. They provide lending to underserved consumers, auto loans specifically. And if you think about an auto loan, you usually will shop for rates. You may get a loan at the dealer, and it's really hard to build a relationship post-disbursement, right? Someone is really happy, they got the car, or maybe they had a poor experience on the dealer, but like they were happy they were able to get the car, they get the loan. Building the relationship afterwards is really challenging. And if you talk about an underserved consumer, they are more likely to do business over the phone, call in, and there's a cost structure of servicing the loan. So what we did with them was essentially, in the base they had dozens of thousands of users, and less than 5%, 7% were using the digital portal. They were calling in to get balance updates, get information, make the loan payments. They may have been using 7-Eleven, Dollar Tree to make their payments. So there were two things that they care about. One was like digital payments of the loan and reduce cost structure of their call center. So we started applying mechanics to have users drive usage of the portal, sign up for automatic payment, or sign up for digital payment, and start to create incentives. As the users were then logging into the portal, we then embedded intelligent micro content related to credit building, related to the everyday life, and we put incentives on top of that. So, a loan, you may not want to interact with your loan every single day, every single week. So we put game loops that were every 2 weeks or every month to get the individuals to come back and interact. And what we saw was drastic reduction on calls from individuals that were using the portal, higher adoption of the portal on the double digits, and then we also start to see first payment default, which is a really important metric to any lender who is in the room that's indicative of the loan performance, start to improve. So you can start to see where we're going with this. It's like you helping the end user do what they want to do, the individual, but then your key metrics of your business can drastically improve if you're willing to do something differently. And that's a CDFI that's been awarded many different recognition in the space that was willing to take a risk on a startup, not necessarily a very large FIS or loyalty provider that's willing to do something new. And I think that the theme of collaboration has been at the heart, right? Like, we are part of the Center of Inclusive Growth of MasterCard, and essentially took a bet on a startup with founders that have worked in the space, that had proved the use case, and now we're a place that we are starting to expand our use cases beyond fintech and regional banks to drive these behaviors. We started with mostly underserved consumer, but we're starting to go more up market with our type of incentives and intelligence. So,
thank you for that. Also, want to shout out to the group here. As you can tell, there's a lot of passion for this work, a lot of excitement for this work. So if any questions that you all have, if time permitting, we'll definitely try to get to. We have one more question, and we'll take y'all's question here at the end. So thank you for that. But if anyone else has, keep those thoughts. You can also find us after the session, find us on LinkedIn, or if you use the app, you can find us there as well. So thank you all for that as we continue. As we talked, it's been a pleasure to be here at Fintech South, and one of the themes, or the theme of Fintech South, has been transparency, reliability, and innovation. Can you share a little bit about how Flourish fits into that, or how do you work in that space?
Yeah, in the theme of transparency, right? Like, I think collaboration comes when you're vulnerable. And that's not a word that you hear often in financial services, right? But like, collaboration comes out of vulnerability. And like, a quick anecdote of my personal story. So like, when I was 15, my family was undocumented in the US. Like, accessing financial service was really tough. People laugh at me when I showed my passport to open an account. Like, I studied in a prestigious school at University of California, Davis, at Berkeley, and I was able to get access. But at the time, there's like over 12 million people in the US that don't have proper documentation to open. And KYC is really tough. But you also don't have enough people that have lived or understand certain situations designing products. And if you really want to have an inclusive, innovative ecosystem, you need to bring the voice of the customer or people who understands or care or have the empathy. If you are a financial institution that have a base of customer that is aging quickly, young adults are not coming to you, you do really well at risk investment portfolio, but you're not willing to change what you're doing and not willing to be vulnerable, saying, I know this well, I don't know this well, I'm willing to collaborate and work with people who bring a component that I don't, you don't have collaboration, right? So to me personally, it was like, I was embarrassed of sharing my story, and I started sharing with others, and I found people who cared. I found my first co-founder, I found Commonwealth who had an interesting product and was willing to write my first angel investment as an impact bond, provided feedback on the product. Then I had the Center of Inclusive Growth of MasterCard trusting us as a brand and taking us to other places. So the willingness to be vulnerable, of sharing your challenges and your problems and why you're doing what you're doing matters. Then you, of course, have to talk about return. Like, we are in a capitalist society, and if you don't have a return, or at least a prospect of the collaboration of how you get return, but then there's also a value in the learning and the knowledge you bring into your organization. And if you're bringing those three components, you have a successful collaboration. Like Commonwealth, we have failed in some experiments. It's probably not as yet public, but our latest components was like around 529 accounts to help individuals, underserved consumers, invest in the education of their kids. And it's really hard to get someone to lock in their money for the long term. So we tried some components of like short-term savings. We worked with the PA Treasury to try to figure out how that works. And it was not all perfect, but the learnings are now in the ecosystem to the next set of iteration to design better products, to be able to evolve. And there's that willingness to be vulnerable, willingness to step in as a learning experiment that we still need more for the field. And it takes a lot of energy too to do cross-sector collaboration. Like for a bank to collaborate with a fintech is hard, it's a different language. Even put together like now a nonprofit organization that knows the language, knows the challenge, but the incentives are also different. So understanding incentives, being vulnerable and willing to try are some of the core components for successful collaboration.
Yeah, thank you for that. You know, it's kind of an ironic. Vulnerability is such a vulnerable word. I'll just kind of throw out there, if y'all are Brene Brown fans, does a lot of work on vulnerability. Definitely check on that for some empathy work, vulnerability, all of that, as y'all get out here. I think we have about 5 minutes left. Definitely want to give time to that question. So if you can speak real loud, I'll let you ask that question. If not, I'll run this mic back to you.
Yeah. I like what you said around gamification and kind of leveraging that as a tool for essentially financial literacy, I think, in the customer experience. I think prior to that, there's this, effort to demystify banking for those that are underbanked. How do you capture that audience who, naturally thinks banks are against them and not necessarily care about them and where they are?
Trust is a huge issue, right? Especially if you've been taken advantage for such a long period of time or misunderstood for a really long period of time. My philosophy on this is Latinos, African Americans, underserved individuals index really high on digital adoption. They index really low on certain banking products, right? So it's not a lack of knowledge, but one can say, is that the experience, the incentives, how it's designed? And I'm very skeptical on the word financial education, right? For more that, like, I got my master's, education was a pivotal role in my life, but information is everywhere. People are bombarded with information that doesn't drive behavior. So how might you create incentives at the right time, at the right place for an individual to act? That's how I think about incentives and the behavioral science of it, right? Like, gambling is a big thing, and there's plenty of issues with people gambling, but there are about non-predictable rewards, intermittent rewards. There is the idea of the excitement, the immediate gratification. How can you start to flip some of those components to very boring tasks that are put out there and put in a way that can drive the consumer forward? There's no magic of overcoming the trust besides like helping the customer, getting them to their needs without charging them excessive fees. But there's also like, can you take a page of the book of TikTok or Instagram or even some of the gig economy platforms of how they do incentives to get people hooked on them? And can you place that into the client journey that you have? And from our perspective as a business, we are doing this with saying, you don't have to build internally. Put our set of Lego pieces into your digital experiences, and then quickly be able to provide those elements.
Great questions and great insights. Thank you, Pedro. Also, just want to put a plug in here. If y'all check out Build Commonwealth's website, we have some research on price and savings, on inclusive design. We just put out one with Wells Fargo about creating trust in the banking space for those. So definitely check out that research. And it led to what Flourish is doing. Hopefully, leads to some ideas and other work that y'all are doing there. But I think with that, we can wrap this up, Pedro. I want to thank you again for taking this time here to chat with everyone. And just a reminder, thank you all for being here for our session. Again, find us throughout the conference or on LinkedIn to learn more about what we're doing. Thank you.
All right, we're ready to roll. Switching the format a bit, we've got a solo presentation here. I'm learning Tepper. Bullheaded data at Nasdaq. Interesting focus on helping global investors build generational wealth by linking access to U.S. markets.
Thanks, everybody. It's awesome to be here. My name is Brandon Tepper, and I run the global data business at Nasdaq. I've personally grown up in fintech. In fact, right out of university, I started in a fintech startup. And a couple days into the role, they actually said, "We just got a new client, it's Nasdaq." I was like, great, sounds like a good opportunity. And so with that, I worked on a project to bring streaming real-time market information to corporates. Something that we actually see every day today, whether it's on your mobile phone, your stocks app, your Google Finance, Robinhood, SoFi, you name it. Something we take granted today. And I actually started working on that project. And it was a lot of fun. Soon after, Nasdaq actually came to me and said, "Hey, we can save some money, you can make some money, why don't you come be an Nasdaq employee?" And so I did, and my fintech career took off. We actually built something, so Nasdaq's an electronic exchange, and we built something called the Market Intelligence Desk, which still exists today. And that was a trading desk that was not trading, but using information to tell a story. And at the time, we were competing heavily for listings. And we used data to tell that story, and we actually were able to bring over a really nice chunk of some of the big names you know today over from our competitor to Nasdaq because we used data to tell the story. And so that's really kind of my career path, is using data to tell a story. And I'm really happy to be here. If I think about this area, to me it's a fintech capital. And I see a lot of talent, I see a lot of innovation in this area, and I have a deep affinity for the region. Going back to data, you know, at Nasdaq, we kind of think of us as the fuel, the lifeblood, the electricity, if you want to use that term. We're all about ESG these days. But also, you know, thinking about how we use data to tell a story. And when I think about like how we play the part of helping investors build their own wealth and creation and long-term investing, it's really us being part of that fuel so that wealth applications, wealth platforms, information portals, fintech firms, disruptors, you in the room here today, you are the ones that are actually building the tools with our fuel to then help investors grow their own wealth. And I think it's all about, you know, using the common themes here that we see at Fintech South. You know, at Nasdaq, we think about, you know, integrity, transparency, and liquidity. And that's really the key elements. And they very much align with Fintech South key pillars. So with that, innovation. What do you think about when you think about innovation? I think about constant change. If you think about Nasdaq's history, we've been disruptors like yourselves. We've been transforming and using technology to drive innovation. We had a huge integral part of electronic markets. Like I said earlier, Nasdaq is a full electronic market. And because of that, back when we started, what happened was there was a lot of biotech companies out on the West Coast that had really good ideas. They were innovating, they were disrupting, they had amazing talent, and they had great opportunities to help our healthcare system, which is today. However, they didn't have a home. They didn't have a place to raise capital. So Nasdaq took that idea, talked to clients, and transformed our electronic exchange to be the platform for those biotech companies to raise capital. And so with that, we gave them a home, we gave them the opportunity to raise funding, to be the Amgens, and AstraZenecas, and Modernas of the world. In fact, we had the CEO of Moderna at Nasdaq this morning, meeting with our CEO. And you know, when I think about that shift in using technology and helping those biotech companies, fintech is The same thing as those biotech companies. We want to help transform fintech to be the fuel and the electricity to help you all grow, so that you can then help investors grow their generational wealth. So on the heels of us helping those biotech firms, then came Intel. On the heels of that became, the Microsofts and Alphabets and the technological companies that you think of Nasdaq today. Fun fact, we actually have more finance and biotech companies on Nasdaq than pure technology companies. That's definitely a misnomer out there. But, it's really about innovation, and I can say, we've taken that and used technology to help fuel that innovation because we want to help fintech firms grow and eventually help them build generational wealth for their clients. Oops. Let's talk about transparency. So when we think about transparency, we think about access and information. And what's important is it's really a foundation of what we call capital access platforms, which is the data business, the listings business at Nasdaq. But we think the guiding principles are about us being transparent, us being the lifeblood, us creating that opportunity, and really giving access. We operate 25 exchanges around the globe. Those 25 exchanges really help investors connect. I've been traveling around the world lately. I was in Hong Kong, I was in the Middle East last week, and what I found is in those markets, typically investors think about their home market first, and then move to the US, then they move to Europe, then they move to Canada. And in fact, that's where we run markets today, coincidence. US, Europe, and Canada. And in fact, we actually provide technology to about 130 different exchanges, clearing firms, regulators, in about 50 different countries. So we power and own 25 exchanges, and then we serve technology to about 130 others. And that really is providing that access, providing that transparency so that investors can make informed decisions. It used to be that firms that wanted to connect, whether they're fintech firms or big banks or any type of investor, you had to put servers in data centers in the suburbs of major cities. And that would take a long time, months. It would be very costly. And so Nasdaq, in our transparency, we recently created some cloud APIs. And those cloud APIs really fuel access around the globe. And what used to take months in data centers now takes minutes. We actually have our team here today that's going to be talking about APIs and cloud-based solutions to help fintech grow. Again, we want to help you help your clients build generational wealth. And we do that with what we call Nasdaq Data Link, which is a platform for premium data. It's not just Nasdaq data, it's not just US data, it's global information, financial content, premium solutions to help investors make better informed decisions. Let's quickly go to resiliency. So, Nasdaq has really been a trusted fabric partner around the world. And again, we support multiple markets in 50 different countries. And we really want to help you on your journey. So if you think about the biotechs of the world, we see fintech as the biotech. We want to invest in you. We've got a team here today. We want to help you grow. We want to help fuel your success. And in doing that, we really have a great opportunity together so that we can help you build apps and so forth for your generational wealth. So we want to do the same thing. We want to invest in you. Come talk to us. We have a booth upstairs. We've got our partners here. We'd love to invest in you. We'd love to use our platform to help you raise capital as well. I know we're wrapping up on time here. Wrapping up, I want to make sure, we think about innovation, we think about change, we think about constantly innovating. if you look back on kind of what we've done as an exchange, what we've done, you have to literally innovate every single day. I don't know if you read, but we just got approval from the SEC to use the first AI-based order type in trading because we're always innovating. I always say that Nasdaq is a firm that runs a lot of exchanges. We sell technology, we sell data, we sell access, we sell transparency, but we could build autonomous vehicles if we pivot tomorrow. We're a technology company. And so I encourage you all to keep innovating. I encourage you all to keep disrupting. Innovation brings opportunity, brings change. And if you don't innovate and you're complacent, that will absolutely disrupt our opportunity to kind of change how investors build that wealth. I'll leave you with something we did, and we might have a minute or two for questions. 2 minutes. We just had a brand campaign that we launched called Question Today. And at Nasdaq, our transparency, our innovation, our integrity, we always think about what we call rewriting tomorrow. And so what I'll leave you with, and you'll see this come up a lot now, we need to think about what questions today will help us rewrite tomorrow. And so I'd encourage you all the startup firms, all the founders, ask questions, ask yourself questions, ask yourself how you're going to challenge something really difficult so that you can also rewrite tomorrow. Thank you. Do we have a minute for questions too?
Yep, about one.
1 minute. Anyone have any questions? Please.
I'll add on that.
Yeah.
So Nasdaq, it was something like a $53 million valuation. So just think about the opportunity, everything that you guys have done has been so instrumental in having you raised like $8 million on a $53 million valuation.
Unbelievable. I love the fun fact. In fact, I mentioned it to you, I saw you nodding. So I'd love to hear your story. But imagine, just investing $100 as a retail investor until then. Definitely help you build some generational wealth. Great. Well, thank you all. Please remind you, we're upstairs. If you have any questions, please think about how you're going to challenge the world and help you get there. Thank you all.
Thank you.
Awesome. Well, you guys get to share too, so pass this on. Looking forward to our next panel, our ladies panel. We've got Dara Albright from Decent Millionaire Podcast, Sabrina Lamb from Wekeza, and Sally Outlaw from Worthy Financial.
Sure.
Problem is I come like this. Excellent. So thank you everyone for coming, and hope we have some good info for you here today. We're going to start off first with having everybody introduce themselves. So let's go down the line. Let's start with you, Sabrina.
Good morning.
Yeah.
Come on, right. So I'm Sabrina Lamb. I'm the founder of
I'm sorry. I was holding the mic.
I'm Sabrina Lamb, the founder and CEO of Wekeza, which in Swahili means save and invest. We're dedicated to provide financial education for families, as well as access to financial services, and celebrating the unique cultures that exist within the African diaspora residing in the United States.
I'm Sally Outlaw. Don't let the last name scare you. I'm the CEO of Worthy Financial, and what we do is we help people painlessly save and invest, and we do that through a proprietary product that we create. It's a $10, currently 6% interest earning bond. And the nice thing is we sell those bonds, to help people build wealth, but then we aggregate that capital and we lend it out to, originally the first 3 bond offerings were for businesses and helping them grow. And then our current offerings are for community real estate projects. So we're trying to solve for 2 things: generational wealth building for retail investors, and then we also want that money to go to support community projects. So trying to solve for 2 things.
And I'm Dara Albright, and I host a podcast called Decent Millionaire. We talk a lot about access to capital, and especially for smaller retail investors, smaller businesses. I'm also a proud board member of so yeah. And I love what both these ladies up here are doing. And let's start with you, Sabrina, because I want to, since this panel is really focused on
By the way, we should mention we had a third panelist who, in case it's on the so she had to
Right.
she was ill this morning. So
yes.
just want to acknowledge her. She's really great. We had a prep call and check her out.
Yeah,
Sorry.
that was nice to do. Since this panel is really focused on providing access to underserved investors and in underserved competitive markets, Sabrina, let's start with you, and maybe you could talk and give us a little bit, shed some light on some of the stats. How underserved really are the underserved?
Well, when you think about the word access, you would think, well, is there someone standing in the doorway preventing you from opening a bank account or understanding your credit or understanding how America's or the West financial systems operate? Well, no, but kind of in a way, because as I understand and talk to my customers, what they say is that we don't feel that we're talked to. And when I say the stats, we're talking about 4.5 million Black immigrants who have immigrated to the United States and kind of live in financial silos. Around the corner from me in Harlem, there's Little Senegal. And then around that corner is Burkina Faso. And you would think, because there's all these different financial institutions that operate all across the country, there are banking deserts in many of these neighborhoods. And so when the marketing or the public conversation is had by many well-intentioned financial providers, they're not talking to those neighborhoods, those people that now live that are our neighbors. So what do they do in response? You can go into a storefront on 130th Street and 7th Avenue, and you can send all your money back to Burkina Faso, or all your money back to Dakar, Senegal. And so when I say, well, why don't you open a bank account to this 4.5 million Black immigrants, not talking about the African American community, although that is also included, what they say is, we've never been invited. And so at Wekeza, we are the economic Statue of Liberty for 4.5 million Black immigrants in the United States and the African American community, because we're welcome and understanding the trust issue of these 40 million African Americans that when the access conversation happens, the marketing, even though there may be an African American in the or a celebrity in the commercial, it does not provide access to the cultural idiosyncrasies and differences that reside in these communities.
That's great. And you make a great point there where you say that when you talk about access, that no one is standing there to stop you. I would actually argue that regulators are standing there, right there to stop you. Right, which I know, Sally, that leads me right into that question for you, which is, talk about how some of the regulations have been an obstacle for, especially for smaller investors, and how Worthy has really kind of created a new avenue for them because of that.
I think that goes back to the Jobs Act. Have any of you here heard the Jobs Act? It stands for Jumpstart Business Act, for those of you who are unfamiliar. And Obama signed it into law in 2012, and then it rolled out in 2015. It took several years for the rules to be written around this new regulatory framework. But it's my favorite topic, because what it did is it updated securities laws. For the first time in 80 years, retail investors could now access all kinds of different asset classes they couldn't before, primarily private credit, which is what we're doing, right? We're selling the bonds and lending the money out. Investors could get behind private equity, and invest in small businesses through portals like Start Engine and other crowdfunding portals. So it's great that they did that. There's still a lot of hurdles for those of us who are creating products within this new framework. What we use is called Regulation A+. That's the framework we've used to create our bonds. I didn't just print them in my garage. It's a big process, right? You have to create an offering circular, go through the whole SEC review, and we say approval process. It's called qualification. And we're independently audited every year, financially, things like that. So we're a publicly reporting company, very transparent from that perspective. So there's a lot involved with it, but I do love the framework, and those changes, like I said, first time in decades, it does open up asset classes for people. Like we get our bond for $10, right? So people can start getting involved with private credit markets, which is what we're doing with the money. So I'm a big fan of the update to the regulations, but it's still a tough environment to act in. In fact, we had a 2-year period where we couldn't sell the product because we got held up with the SEC review. We've now surpassed $200 million. We're very happy about that. We hope to grow to $1 billion in the next couple of years with our new offerings. But it's still tough. They're not trying to be that helpful for retail investors.
And it's interesting, on Regulation A+, so the original intention behind it was to help small issuers access capital on Nasdaq, from the previous speaker talking about. And what you've done, which is really interesting and exciting about it, is that you took it and created a debt product to help retail investors access yield.
I should follow up with that. In case there's any entrepreneurs here trying to get capital for the company, to Dara's point, Reg A was really created primarily so people could raise money for their own company. Basically, you could offer equity product, right? And it used to be $50 million per year per entity, and the SEC raised that cap to $75 million. So that's a substantial amount of money, $75 million, really per year per company, that they could, use those regulatory framework to raise money for their venture from the crowd, from their own customers, from the people that know and support them. So you don't have to, go to venture capitalists all the time. You don't have to find angel investors. You can really tap into your own community, and that's what we've done. We've used to create a debt product to, sort of bridge people to a return and to have a product they can, grow their wealth with. And the reason we've been able to do 200 million is we create individual entities. Every time we sell out, we create another entity. So you can get around this sort of annual cap, right, of every 12 months if you have additional entities. Not if you're raising equity for your company, but if you're fractionalizing assets and trying to find another way, to turn it into a security product. But anyway, so I do encourage people if they are trying to raise capital. Obviously, regulation crowdfunding, you can raise up to $5 million, but under our framework that we use, Reg A, you can raise up to $75 million. So it's, I'm a big fan. Don't get trapped in an elevator with me. By the time you hit the ground floor, I've been convinced to come into my industry. But it is a powerful framework.
And I want to jump a little bit into one of my favorite topics, which is financial education. I know two panels before, they were talking a lot about that. And maybe I'll first start with you, Sabrina, and then Sal, you weigh in on the same question. But how important is financial education to small retail investors?
It is a priority. I mean, even though we definitely encourage our customers to, enter into the financial services, I don't want anyone to invest in anything without them being fluent in what they think they understand about that particular investment. There's a lot of bad information happening, and a lot of people are sitting down or trusting people who just cranked up a YouTube channel, has 1 million followers. And my first, I'd eliminate people that are famous or that are, have millions of followers. My question is, do you have a license to give out all the bad information that you're giving out? And so I come to this space, in terms of Wekeza is the founder and the CEO of an 18-year nonprofit called World of Money. World of Money is a leading provider of immersive financial education for children ages 7 to 21 here in the United States and in 5 African countries. And so there's a lot of people, millions of people, that are looking on the outside in terms of trying to navigate this powerful currency called money. And so we start with unpacking a parent or a child's understanding about the worth of their own financial security. We don't start with investing. We don't start with, I recently received an email a few weeks ago, and they wanted to know, I want to open up an options account. Well, do you have a bank account? Do you have a 6 months emergency savings? What is your understanding about money as it relates to you? Are you the first one in line at Black Friday? All of those behaviors and perspectives have to be unpacked before we do anything. And so the immersive part of World of Money and the immersive aspect of Wekeza will include, just an inventory of our own understanding of money, our own history with money, the financial history of the world, to not only budgeting and credit and all of those other modalities, because as you know, money changes, has evolved. And so we have to keep up with what is happening and what those new subjects are. But when you're talking about vulnerable communities, and I believe anyone is vulnerable and anyone is underserved who does not have a basic understanding on how money works and how money flows, we have to really, really start there. I don't think for me, it is not ethical to open or provide access to Wekeza. And you can invest in U.S. publicly traded companies without providing financial education in the languages that my customers speak, from Swahili to French to Angolan Portuguese, et cetera, et cetera. Otherwise, we're just irresponsible, and we are potentially causing pain, because they're going to blame, Wekeza did it. Wekeza gave me the access to invest in Tesla, but without the education. So I'm not in a rush for people to use Wekeza without first using all of our financial education tools. And if we're referring to any financial advisors, they're licensed, vetted financial advisors who are not selling courses. They are providing, across the table, accessing that family, that individual's financial goals. I can't underscore it enough. And when it comes to investing in markets, the African American community is about 5% in terms of even investing. And I understand the history of it. I understand the theory component, absolutely. And that's why we have to start with the education.
Well, I love that you touch on language barriers, because that is definitely something that needs to be overcome. But even getting down to the basics, and I think there's a problem here just in the U.S. in general, in that financial literacy has been lacking even in our schools. They don't teach us.
Definitely address that, because parents, we have about 8,000 members of the World of Money community whose parents, the children, the parents obviously, that are enrolled in that World of Money and who are Wekeza customers. And so they all say, well, why isn't it in the schools? And yes, World of Money does partner with schools, absolutely. But the teachers say, my own financial house is on fire. And now I'm required to teach this. I might as well teach trigonometry or whatever. And so the educators have to first, unpack their understanding. Yes, we can provide the curriculum, but they're reading over the shoulders as the children are as well.
And I'll just add too, for people local here, there was a law that was recently passed here in Georgia that's going to mandate financial literacy education in our high schools.
There are so many laws. Did you know it was a law that donkeys can't cross the street in Manhattan? Right, but no, these laws are not being right. I thought you did, but to me, it's almost like, so what? Because if the teachers don't have the tools to be able to provide it, it's mandated. It's a law in many states. But if they don't have the curriculum or the tools, then how can they actually provide it in a holistic, informative, impactful way? That's my word, impactful.
Yeah, weigh in on that a little bit.
Well, I have one comment. Wouldn't even mind if we asked the audience, what do you want to learn here today? Because if we have any wisdom that would help you in your individual journeys, it'd be helpful. I agree 100% with both of you. We already, we have some education on our site. We're growing that. But I also want to add that a lot of us already know what we're supposed to do, and we can't do it, or if we don't have the discipline to do it. So I think the tools like Pedro, my buddy, was in the session before us talking about, some of the gamification and just things that allow you to reward yourself. And like we have a roundup tool, right, with our app. And our app is free. Our buying and selling our product is free. But we have, the roundup your spare change, which a lot of fintechs are doing now. So that, it's painless, right? You can, every time you swipe your card for your gas or your groceries, we're calculating your spare change up to the next whole dollar. And when you have $10 in spare change reached, we trigger a 6% bond for your account. So what we find is sometimes if they don't want to spend the time to educate and they just sign up, they get excited when they see that they're actually saving. Oh, I already saved $300 painlessly, didn't know it, and then they want to learn more. So sometimes you have to lead with just getting them in the door and letting them see the little bit of that savings and see that growth, and then they get more interested. Oh, and what other products are there? And what else can I invest in?
And I think that's really important because if you look at just even the retirement crisis that we have in this country, I mean, we have, a true crisis. I mean, we have I think it was one third of Americans don't have any savings, retirement savings whatsoever at all. And I think fintech, we're at roundups such as Worthy's, that is providing such a service because I think fintech ultimately is going to be what works a retirement crisis in this country because it's scary and the system is not.
You need those tools. You need the tools that
right.
can help.
Yeah.
And I don't want to hijack because you're the moderator. You have lots of good
No,
questions. But I always people come because sometimes they have their own interests and own needs. Is there any questions from the audience that we can help with our background? I don't know. Sure.
And I want to ask Sabrina, so South has a great point about sometimes we know that we do it, but in your experience, what does that look like for a person? So I think it's a little different, right? You know what you need to do, you're coming from your background, such as something what does that look like?
Boy, in the workshops and conversations that I've had with parents, or those who are not parents, there's a lot of trauma, a lot of emotional trauma. So you can have all the fantastic marketing and the fancy brochures, not addressing that. And what do I mean by emotional trauma? Maybe that person has been ripped off. Maybe that person has zero confidence in their own not only in addition to that, but I had a child tell me that culturally, this saving, we don't do that. Or no, I don't believe that my life is worth saving. I don't believe that my life is worth saving, so therefore I'm not going to save any money. So unless I, the head of the company and the nonprofit organization start with that, then we can get with the confidence of that person and that family really starting taking action steps to create financial security in their life. But we have to start there because every time many people end up, or they're in partnership with someone that is not on the same page financially. One is a saver, one is not. One is a dictator, one is a Disneyland person. And unless you're addressing, and I do, I've written a book about it, Do I Look Like an ATM, which unpacks different money archetypes. And everyone's about 50 people here. There's 50 different archetypes in here. Or maybe your parents had, that, no, we can't talk about money. That's grown people's business. I grew up in a family, my wonderful parents. My father was a dictator. My mother thinks she's Queen of England. She does. She really does. And so what does that mean? As the financial sociopath in the household, what I did was I manipulated my parents so that I could get everything that I wanted instead of needing. And because my father prevented having any conversations about how money works, when I graduated from university, I didn't know how money worked. I mean, my father was going to ride in on a white horse. So if you have those kind of experience from loving and well-intentioned families, can you see how that kind of multiplies into millions and then causes uncertainty and vulnerability in communities?
So, I just want to say one thing, which is we didn't choose our name Worthy for, male thought.
Right.
I mean, we say you are worthy, all of our emails, and that's, we get people, little people crying, like saying, I'm in tears because you're the first company that treated me, that my $10 was important or whatever.
No, it means something, and, I think both of you bring such really interesting points, and I think Sabrina, when you talk about, and others, am I worthy? I think when it comes to savings, I think it's not only a financial decision, this is also it's a very philosophical question when you think about it, because what is saving really? I mean, saving is saving for the future, so you're planning to, you want to make sure that you're saving that money for the future. So you're taking a risk in and your gamble that you're going to live to a certain age, and if
That's huge right there.
right there,
Because
so
many people in underserved communities don't believe in terms of the longevity
right.
of their life.
And they're so if you believe that you're gonna die at a young age, you're gonna basically take risks in life. You're not gonna save money, and maybe that's you end up outliving your money, but at the same time, you could say, you know what, I'm going to live forever, and I'm going to just save every single penny and not do anything, and then you die young and you never, live. So, it really is. It's a balance.
Or you feel that you have lived because you have someone else's, some famous brand name on your body, and for you that proves your own worthiness. And so my work is shifting mindsets and behaviors from just consumer, just buy, to saving and investing and entrepreneurship and philanthropy. Without those four paths, there's not a particular or a healthy relationship with money.
Yeah, exactly.
Are there any other questions out here?
So then let's talk a little bit about community, because this is really, what Fintech is all about. It's community capital. So talk about that relationship. Sally, maybe you could weigh in on the relationship between community and Fintech.
Well, I think that's what we're all about, right? I mean, I say we support Main Street instead of Wall Street. Wall Street has its place, and the public markets has its place. But I mean, I imagine a world where 50% of our investments are made within 50 miles of our house. I mean, how would our communities change? Our downtowns would be thriving. It would really have ripple effects everywhere. So, we're all about investing in our communities. Everyone should be stakeholders in their communities. You should be able to invest in the local taco truck that where you eat lunch or what have you. And then, lending into community projects. I just think we have a power that a lot of people don't think about. I mean, they say, "Oh, I get ripped off by Wall Street," or it's all rigged. Well, if 1 million people said, "I'm going to commit $500 to our local community businesses," that's $500 million that would come back to our local economy. So I'm just a big advocate of community capital, of crowdfunding, of really being stakeholders in our communities, and that's the basic.
It's interesting because you know what community investing was called like 100 years ago. Investing.
Oh,
That's basically what it was. I mean,
Right.
everyone just really did invest in their community. We had local stock exchanges, we had local community banks.
Well, and to her point earlier, I know some of you may have been here from the earlier Nasdaq guy, but you made the point that in 1997, I think you said it was, Intel went public
I said 1971.
71 went public at $53 million. So all that growth through multi-billion-dollar company landed in the hands of retail investors. All of us could build some generational wealth and move on into there. Now when they go public, they're already $6 billion in value, right? And the Teslas of the world. So we get this much growth, retail investors get this much growth, and all the growth happens in the hands of venture capitalists or, and I love them, entrepreneurs love them. But there's a big hole there for where are we going to build our wealth, where individuals going to build their just generational wealth. So I think the more that we can open public markets, whether it's equity or debt markets, to everyday investors, that's where we're going to start building generational wealth again. It's not going to happen in public markets.
So here's an interesting question, and maybe you two could weigh in on this and just kind of think about it. So if that is, I agree with you, and I think that is where it's going. Do you think it's the technology that makes it possible for us to be, community driven again?
It's the fractionalization, and there's a few more sessions on that today, I think. But we can take real world assets using it's a combination of regulation and technology, right? As I mentioned earlier, we use Regulation A+ to update, the securities laws with the Jobs Act. Reg A allows you to sell to the public. And so you can fractionalize things, whether it's real estate, whether it's in our case where we do business lending to help underserved businesses. It could be horse. I think they do it race horses and artwork and collectibles. It could be anything. So if you can take a real world product now that has an income potential, to generate revenue, you can use something like Reg A to fractionalize it and sell it to the public in $10, $20, $100 increments. So that's why I like the real estate use of affordable housing. So also you can take these big projects and get the buy-in from the community, and so you're helping people build wealth while you're strengthening the community.
Well, let's talk about that impact element for a second, because do you think community capital and having small investors who are really more involved and engaged in the process, that will help maybe foster a social impact investing in a lot of these type of projects? Do you think that was kind of what has been lacking when we went to a more institutional kind of domination of our markets?
I was just speaking with the newly elected council member in Harlem, Yusuf Salam, that I wanted to work together with him to restart the economic renaissance of Harlem and the Harlems of the world. They become financial deserts, and it's not just Harlem, and it's community that are not going to walk into a recognizable bank to achieve any service. First of all, they don't believe that they can. Or they don't believe they can schedule a meeting to review the kind of services that bank offers. And I think a lot of banks miss opportunities. But community, I love what both of you are saying in terms of going back into that woman that has a nail salon or, the bike shop or whatever, and really investing in those communities and lowering the threshold for them to be able to access not only financial and entrepreneurial education, but also access to capital to be able to either launch or to grow their businesses. It's in the people. It's in the community. Yeah.
Power of the crowd, right?
Power of the crowd.
So Sally, you wrote the book, Cash from the Crowd.
Very boring book, don't buy it. Yeah.
But that does make, it is an important, like you make the point about, like restaurants. How, Sally, maybe you can weigh in a little bit how crowdfunding can play an element in not only from the financial aspect of owning a piece of that company, but also getting other perk or reward. Do you see that happening in the future?
Well, it's not just a financial. What I like about crowdfunding, and if any of you are looking to, for capital for your businesses, I'm a big advocate of crowdfunding. To her point, I did write a book called Cash in the Crowd, which you can buy whatever to learn about it, but just but anyway, the whole idea is not only is it a way to get capital for your business, but it's your marketing team. All of a sudden, if you have hundreds of your local community members who use your hair salon or what have you, their lights fixed, those customers can, for $100 or $200 or whatever the threshold is, they can now be investors in your company, and they become your team of marketers, because they say, hey, I invested. I'm going to go to that restaurant because I own $100 or $200 piece of it. So that's why I love crowdfunding. It's not just going back to my point of the importance of community capital and being stakeholders in those economies. But you have this tribe now who's gonna go out and market your company. I'm gonna put on Facebook, hey, I own a piece of that hair salon, send my friends there. So it serves a lot of purposes, it's not just capital, it's beyond that.
So do you see like, let's say a restaurant raising money and you could, in exchange for your investment, you could get not only
A discount on your,
equity,
yeah,
you could
discount on your
you could
meals.
get
Yeah.
a burger named after
Yeah,
you.
yeah. The Outlaw burger, I like that, I would, don't even, I would order that. But yeah, no, totally, yeah.
You know what? Community already exists, and coming to you, already exists. And I think about the Caribbean community and their susus. I was talking to my friend who's Jamaican the other day, and she just reminded me, we use susus to send our children to college and buy houses and start our businesses. And no one's really talking to us. And we're talking about not just the Caribbean, actually, in African countries, there are susus, and that's how they transfer millions of dollars. But that's the crowd fund. That's it, and it's cash, and it's insular.
Sabrina, I second every word you just said, coming from a German, actually.
Sprechen Sie Deutsch, guten Tag.
Yeah, everything that comes, from foreign direct investments. I deal with families all the time, moving CEOs to, car suppliers, automotive suppliers, manufacturers, and they cannot take credit, they are coming here and, there's no way for them to buy a house, buy a car, the wife or the husband cannot, get involved in community. So that's something we need to change.
And I think you're absolutely right. And this is how I'm thinking back to this in terms of my own experience. My co-founder and I have bootstrapped this baby all the way to the door. Yes, are we interested in investing from the correct investor? Sure, and we've done crowdfunding as well. But the way that I live my life is that maybe there's someone not going to ride in and invest. But I'm determined to move Wekeza, no matter how long it takes. And again, I welcome an investor, but we've had to bootstrap it from our own money. And that's how much we believe in, and that's how much our community says that they want it, not only want it, but need it.
One quick thing, I don't know what time it is, but yeah, once you get started here, you can shut us off. Oh, 2 minutes, we have a 2 minute warning. I was just gonna say to your point, the nice thing in the fintech community, we don't do this currently, but there are a lot of fintechs out there who are now rewriting the rules for underwriting, right? So there are new up and coming firms that don't go by the traditional credit underwriting. So there are solutions coming, there are a few out there now, but there are smart fintechs that go, hey, there are people like you just mentioned, who aren't going to fit the box, right? So they're coming up with unique underwriting, whether it's looking at your social, feeds and what kind of things you're doing. Obviously, we look at some traditional, look at your bank account balances over time. So it won't be the traditional boxes for credit. So I look forward to having more of those available because that will open up credit for people who are, good credit risk that just don't check the boxes. Other criteria, other criteria, correct? That can show that you're risk. So we have 2 minutes. I don't know if there's any other questions, or do you have any burning question you wanted to bring up? But
Any other questions out there?
you can always hear yourself in the video. Come get your free bond at the voting booth, by the way.
Because one of the things, the fourth panelist who unfortunately couldn't be here today, she was going to talk a little bit about just some of what they do if they lend to a lot of emerging companies and businesses. And what I thought what was interesting was that she was going to talk about how, the problem that some companies have right now raising capital with predatory lenders, and how fintech is really, helping to create a better option. So
even for that gentleman's point, online lending is getting better. Yeah, there are now getting careful.
So companies don't have to resort to paying 50%, these crazy, crazy interest rates. So I think that we just ended off, I just think that there's just a lot of solutions out there, and they all come from fintech. I mean, this is really the future, so.
Ongoing conversation, you can reach out to me on the app, but I'm also hosting a Super Brain Date at 1:40. You're all welcome. Have just break down this conversation even more to infusing good in fintech and how you can too. And of course on LinkedIn, but the website is Wekeza, WEKEZA.com.
Don't forget your Worthy Bonds. Worthybonds.com is where you can find us. And like I said, we give it spin the wheel to win a free bond upstairs, and we let you spin until you win. So they'll, it's not a scam. Yeah, you're all day. But anyway, so Sally Outlaw, LinkedIn, same thing, or Sally at Worthy.us and worthybonds.com.
Dara. And you can reach me also, Dara at worthy.us as well. Make it really simple on the memorizing.
That's right. But we're glad you're here. Thanks for your